At the last RBNZ meeting, they took a decidedly hawkish tone. The RBNZ recognised that annual inflation remains too high in New Zealand at 7.2%, and so it hiked by 75 basis points rather to 4.25%. Now that was expected, but the RBNZ now sees itself needing to hike interest rates at a faster pace and did consider a 100 basis point rate hike. This should keep the New Zealand US dollar pair supported as long as there are reasons for US dollar weakness. Now, the US is laser focused, like most countries, on inflation data. And we've got US Core PCE data coming up on the 1st of December. Now, if we see a big miss in the inflation data there, then the Fed will need to be less aggressive, which should be encouraging US dollar weakness. Similarly, with the non-farm payroll data on the 2nd of December, if that comes in at a big miss below market's minimum expectations, then it would be reasonable to expect some US dollar weakness. However, the main event will, of course, be the Fed decision on December the 14th. But if we have reasons for US dollar weakness, there is reasons for the New Zealand dollar to be supported, particularly on strong US dollar weakness. And you can see that this seasonal pattern for the Kiwi is pretty strong. It has a bias for strength in December with maximum gains of over 12% and repeated gains, 80% winning percentage of upside bias for the New Zealand US dollar, 16 gains, 4 losses over the last 20 years between really December, end of November into 31st of December. The major risk here, of course, is that US inflation keeps getting higher, the Fed keeps aggressive, and US jobs remain strong, which will likely keep the US dollar bought. Remember, don't just trade it, but season exit.